Tushar, great to have you. Thanks very much for taking out the time. You know, with all the volatility, with all the nervousness and tension around, how are you approaching the market? Where are you seeking protection?
Well, I think what happened in the over the weekend in Greece, and then the resultant impact on markets globally, has been a bit of a surprise here. And given that this uncertainty is going to continue for about the next 1 week or so till 5th of July, when the results of the referendum come in and the subsequent impact, I think it is definitely prudent to just buy some downside puts over here, maybe 7,800, 8,000 levels. If it's a sentimental negative. There isn't going to be a very strong economic impact, so to say, on India per se with the Greek exit, but I think just a sentimental impact on on markets globally. So we could probably look to see another 3 to 4%. However, I think broadly the underlying trend, notwithstanding the Greek issues, should be pretty strong. And if we have a favorable outcome of the referendum, we could see the markets go back again to the 8,400, 8,450 band.
What is a favorable outcome? As of now, street is divided that what is a good outcome for Greece, because there is 50% of the Greek public wants to stay with EU, other 50 wants to split off.
Well, that's what the entire challenge is right now, because given the fact that if the outcome says that okay, fine, we want to stay with Greece, then if we want to stay with EU, then you have Greece going into elections again, and you don't know what the outcome of that election is going to be, because effectively the Prime Minister there would have lost his credibility, given that he's been battling against the entire austerity and stuff like that. But what markets do want to see is whether if Greeks vote in favor of staying with the Eurozone, whether the IMF will roll over the debts right now, which the Greek banks have to pay up. So I think that's what the immediate clarity that we want to see right now.
Yeah, is the answer that simple? Because if they are voting to be in the EU, then they're also giving a stamp of approval, or not completely, but in that line that they are okay by the measures that or the conditions that EU has imposed for its debt renewal, which essentially calls for austerity. So my question to you is that given the uncertainty, how would you want to play this risk?
See, the risk, what we want to play out is how do you play out the Indian equity space right now. The uncertainty, the fact, unlike what happened in 2008, where there was a lot of debt being held by private hands, a lot of the Greek paper is just held by the central bank, and we know that backstopping arrangements which central banks have right now are far greater than what they were in the times of the previous financial crisis. It's not that you will see private companies going bust because of the euro action and stuff like that. So I think the story here is more sentimental play, and which is where we are saying that you could see those gap down moves come down to the 7,800, 7,700 levels. But for investors who are looking to play the India growth story, those are going to be clearly buying time. So from a trading point of view, you buy protection at that level. You don't want to buy protection at 8,200 and 8,100, because that's not what you're playing for. You're playing for a larger dip to go long on the markets. Maybe a 7,800 put, you sell that against a 7,300, 7,400 put, because those are levels which again definitely people are going to go long on the market irrespective of what's happening in Greece.
Wow, that's
so you take a 5% down hedge. You take a 5% down hedge, and then you kind of time your buys accordingly.
Let me come to something that can be extremely susceptible to any kind of news flow around banks, and that is the Indian banks, the financials. They could take a deep crack, because the first run on the money, if indeed there is some contagion, will be on banks across the EU region, and therefore banks in India could get impacted too. How are your trading positions on both the private banks and then the PSU banks as well?
See, I think the PSU banks have clearly fallen off the radar. There's only one trade there, which we kind of continue to see that it's probably a painful trade on the downside, because there are just way too many issues grappling with that. You will see those pockets coming in of news items where about bank capitalization and stuff like that. But I think the trend on banks across the board, public sector, is on the negative side. So as a clear trading strategy around that, you hedge that with the private banks, and that's been a trade which kind of continues to play out, and we'll probably continue to see that trade continuing to play out.
Telling your clients that it's time to initiate short positions, do you think in the short term Nifty has topped out? Are we trading at the upper end of the trading range? Greece, no Greece?
At 8,250, definitely not. I think the upper end of this trading range is probably around the 8,450, 8,500 odd levels. And Greece or no Greece, we'll probably see some support. No Greece, we'll see some support around the level in the market around the current levels, and maybe a dab at 8,100. So we are definitely, at 8,250, we are not at the upper end of the range.
Okay. Now, Tushar, the other big question is, what are you doing with the export-oriented themes right now? Because they would have a bit of a bearing on what happens out there. I mean, we've just seen what's happened to auto components today. IT was in a bit of a sticky spot last week as well, before Accenture came out with its guidance as well. How are you trading the export-oriented themes? Let's start off with the non-IT names, be it pharma, be it auto components.
So I think very clearly the export-oriented names, and especially exports to the Euro region, they are definitely going to be under pressure given the way things are panning out. There is effectively a lot of mayhem in the currency markets as well, and we would you have to be nimble on these trades, because the news flow turns and you could see the trades move significantly higher. But the way Bharat Forge has reacted today, or some of the other pharma names are trading, you would continue to trade them with a very cautious negative bias, but be very wary of just a reversal of news.
So no short, that's the house advice. Even though we could be staring at a domino effect, a chaos in Greece, you don't think it's a time to initiate a short position. So my question is, historically,
because it's got to
please go ahead. I want to understand the logic.
So what I'm saying is that it's going to turn very quickly back, because the moment you see some of this news event subsides, you will see the currency markets start playing with gap takes, and you will not be able to cover those positions. So the trend is negative as of now, but if you have a trading position which is on the short side, you have to be very nimble with those trading positions, is what I'm saying.
I love your analysis there. So I'm going to move from Greece and move from China and talk about the important event in the month of July, and that is earnings. The widespread expectations are that earnings season will not be strong. There will be inventory write-off, there will be currency volatility, and margins are unlikely to expand. So how should one approach the earnings season?
I think a lot of negatives on the earnings are already priced in. So as like you've already pretty much summarized what we expect, that there should be a slight marginal expansion on margins, and there should be relatively inline performance on revenue numbers. The earnings season has to be taken positioned slightly on the upside. So you've got I think the earnings start kicking in around the 12th or the 13th of July. With the IT probably, and so you would have to trend that with the positive bias, but there is just too many moving parts of the entire season to say that how do you approach the moving this thing. But the broad view here is that the markets probably have a top range at about 8,400, 8,500 as earnings come in. If there are positive surprises on that, especially on the margin side, you could see the stock specific activity increase over there. But you've got the overhang of global events right now, which could probably see the markets come down to 7,800 odd levels.
I don't know whether the currency also comes in your preview, but given the fact that there's a derivatives market there too, how are you looking at positions on the rupee?
Per se across the board, I think pretty much we are seeing the rupee react to react to the dollar strength per se, though I believe there is reasons to believe that the central bank is pretty active in trying to curb enough volatility, but we don't really track the currency futures market here per se. I'm just giving you a broad sense of what's happening on the on the spot INR.
So what is your Nifty assessment or Nifty range for this series? What are the two signposts, the goalposts?
8,500 as of now on the upside. More than earnings, I'm looking at a positive trigger to come out from the parliament session with respect to GST and the land acquisition if there's any progress there. If we do see some movement there, we could easily head up to the 8,800 levels, but we don't see positions built up to that level right now. On the downside, obviously, with the global events per se, 8,000 should be a strong base, a level which it has rebounded back from the past as well, but maybe 7,800, if there is a contagion and spread like that. But I am biased more towards the positive side just for the local events.
Question, markets started gap down, which means they've not given any big opportunity to anyone to sell or to exit. After a gap down start today, are you a buyer?
Am I a buyer? I'd probably wait for the European Open because you want to see what the European markets react to this entire thing as well. But 8,250, 8,230, from a trading standpoint, if I see that level again, post Europe Opens, I would be a buyer.
All right, Tushar, we leave it at that. Thanks very much for putting the derivative side of the market in perspective and helping our viewers understand how they could seek protection, hedge their positions in these volatile times. Appreciate your views as always.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.